Never, ever, ever use stop losses.
Chris Camillo is an individual investor and founder of Dumb Money Live.
This trader has taken $20,000 to now 70 million plus.
If you're an investor right now, it's time to take this stuff seriously. This is it. I don't know about 10 years out or 15 years out, but what I do know, what I'm super confident in, is that some of the biggest trades of my lifetime are about to happen.
What are you looking for at the moment? What's taking your intrigue? What is the focus? A potential generational sort of trade is in the next 2 to 4 years? Or is there anything that you've identified already?
So
I essentially took roughly 20 to 40% of my portfolio and poured it into the next trade. I invest with conviction.
we're about to essentially rebuild the global economy from the ground up. The biggest trades of my lifetime, I think, are going to happen in the next 2 to 4 years. All these trades are about to happen. And they're like, how do we find them? How does a regular person find them? And my answer was, now you can read the minds of every person in the world by simply knowing what to look for through social media sites. There's very much like an us versus them being institutional Wall Street. We find things quicker than them. We vet them deeper than them. We connect dots quicker than them. We have such an edge on Wall Street. So like, I know that like, this is the window. This is the time to like make it or break it. If I have a thesis on a trade, the stock starts to move in the different direction than I would have hoped. That's a good thing. That means I can go deeper into the trade now. I don't trade price. I trade information.
Do you feel that there is a particular commonality that is necessary for this style? Do you think that's something that can be developed?
You know, no one's ever asked me that question. It's a good question. That's interesting. I think
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey everyone, before we get into this incredible episode, I just want to say a massive thank you because we are still the number one trading podcast in the world and the fastest growing still, thanks to all of you and our incredible guests. When we started this podcast 3 years ago, I just did it for the love of podcasting and trading. I didn't know where it would go. I was interviewing my friends who were traders. Suddenly I'm interviewing the biggest influencers in the world. And the next minute I'm sat opposite Jack Schwager, the author of Market Wizards, a true inspiration to millions of traders across the world and myself included, especially when it comes to the podcast. It's meant to be a modern day video representation of Market Wizards. And ever since I met him, we went verified with all of our guests. And I'm so happy and proud to announce, thanks to all of you supporting, we were able to do a massive US tour in January where we went across 10 different states, interviewing the best traders in the world, collectively over $1 billion in profits and hundreds of years of experience. My commitment to you is if you subscribe, if you like, if you share this with your fellow traders, I will continue to bring every single week the very best and brightest traders that you can possibly imagine to help you elevate your trading. Today we have Chris Camillo, one of my personal favorites, someone who I really looked forward to interviewing. He was not only in Market Wizards, but his style was absolutely unique. Social arbitrage, using TikTok to make verified 8-figure returns from just tens of thousands of dollars starting out. And he doesn't use a stop loss. Now, just before we kick off, we are partnered with Market Journal. And every single week, Market Journal gives insights on what's going on across crypto, forex, futures, and stocks so that you do not have to panic, you do not have to worry, you can be informed with a very easy read and easy to understand newsletter. Now, the link for that is in the description below. The reason I mentioned that is I partnered with them with this huge tour that we've been on, that every single week we will create a PDF breaking down the key lessons from each episode. All you have to do is subscribe, then every single week you will get the newsletter and there'll be an attachment that you can save to save these gems. Thank you. We're going to continue to bring you the very best. Hit subscribe, and now let's get into this episode. Welcome everyone back to the Words of Rizdom podcast. We are back once again, and we're still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. We're still on this huge US tour. We're in a new state. We are in the one and only Dallas, Texas. And we're here for one man only. And this tour wouldn't be possible without our sponsor, TradeZella, the number one trading tool for journaling, backtesting, automated analytics, and so much more. Check them out in the link below. But this guest, highlighted in Unknown Market Wizards. This is actually an episode I've been waiting this whole tour for because I'm so excited to hear more about this very unique edge. This trader has taken $20,000 to now 70 million plus. And again, it's such a unique edge. We're with the one and only Chris Camillo.
Wow, that was the coolest intro ever. Thank you.
We're trying. You deserve it. You deserve it. I think one thing I wanted to say, and we joked about it just before, is like the man who's getting TikTok banned in the US.
Yeah.
That's not true.
No. We don't need that. Let's hope that doesn't happen.
I hope it doesn't. But that's what we want to get into. You've taken $20,000 to over $70 million using TikTok, using X, using social arbitrage, as you've coined it. Like, what was the one aspect that allowed you to do that? What one skill set, one attribute that allowed you to make that happen?
So like everything that I do revolves around one principle, and it's trying to surface change early, right? And so like that sounds like the easiest thing in the world because it's something that anybody can do. You know, we observe change in the world around us, in our physical world, digital world. So there's nothing necessarily that I can do that you can't do or anyone can do, but it's like having to retrain your mind to observe more keenly than you normally would, and looking for change, right? Like, and when you surface change, being able to quickly connect dots between that change and investable opportunities in the market, like that's essentially the core of what social arb trading is. What's so cool is that now that the world has become digital, it's easier to do this than it ever has been before. I mean, you can say that Peter Lynch was doing this in the 80s to some extent for like a part of his strategy by walking around the mall and trying to assess which stores had the longest lines at the registers. It was part of his strategy, and that was a book, One Up on Wall Street, that I read as a kid. And it obviously had a big impact on me and my eventual trading strategy. But now you can read the minds of every person in the world by simply knowing what to look for through social media sites, like comment analysis. You know, I spend 3-4 plus hours a night just reading comments, mostly on TikTok. Like, yeah, so let's hope TikTok doesn't go away this weekend.
Yeah.
And it's because that's where people express themselves. That's where people talk most openly about the things that they're passionate about what they're buying, about what they want, about what they're doing, about what they love, what they hate, what's in, what's out. But it's not just about trends. Like, I think people a lot of people automatically think that everything I do is about trends and, you know, what's in style or not, right? Because I talk a lot about that because it's something that's highly relatable. It's like, okay, these shoes are in, these shoes are out, so invest in this company and short this company. But the truth is, change impacts the world in so many ways. So it's not just change in consumer product trends, it's change in technology, which is, by the way, probably the changes in technology are probably some of the biggest trades I've made over the past 20 years. And going the next 5-10 years, I think changes in technology are probably more important than anything else. Changes in culture, shifts in culture, political shifts, shifts in weather, right? Like anything that's changing. The bigger the change, the bigger the investable opportunity. The quicker the change, the bigger the investable opportunity. When you have a big change that happens really quickly, that is where you have the ultimate opportunity for like a generational trade. And so like here we are today in 2025, right? Like what's about to happen? We're about to essentially rebuild the global economy from the ground up, which has never happened before in my lifetime because of automation, artificial intelligence, and robotics. So like I'm barely sleeping these days. Like the biggest trades of my lifetime, I think, are going to happen in the next 2 to 4 years.
Really?
Yeah. So it's like it's ahead of us, not behind us. So like I know that like this is the window. This is the time to like make it or break it. So like we always think that we miss the big ones from the past, right? But no, I keep telling people like I don't know about 10 years out or 15 years out, but what I do know, what I'm super confident in, is that some of the biggest trades of my lifetime are about to happen. Whether I catch them or not is to be determined. But if you're an investor right now, like, it's time to take this stuff seriously. Like, if you're an investor right now, like, this is it.
What are you doing in terms of preparation then to be ready for this lead up?
It's so funny because someone literally just asked me that on X this morning. They were like, how does a regular person, I was specifically speaking about the change that we're about to see with the coming age of AI and robotics and automation. And they're like, how all these trades are about to happen. And they're like, how do we find them? How does a regular person find them? And my answer was, think deeply about the change that's happening day and night, 7 days a week. Think deeply about it. Make that the primary focus of your life, is thinking deeply about this stuff, and the trades will come. And if that doesn't work, go find people that are thinking deeply about it. You don't have to do all the work yourself. That's the amazing thing about platforms like X and TikTok and others. Like, you don't have to do this on your own. There are people out there that are obsessive about detecting, the changes that are happening every day. They have unreal perspective. Find them, follow them, and then connect the dots to investable opportunities.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZeller. TradeZeller is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZeller. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZeller does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZeller, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
So like the first part of social arb strategy, which is surfacing change quickly, you're not on your own. The connecting the dots to investable opportunities, that's a piece that you kind of have to have a heavy hand in. So what's really cool is that over the past decade, I built this community with my 2 YouTube partners, Jordan and Dave, the Dumb Money Live community.
I love that.
And we're really weird because we're really fortunate to be older YouTubers that are kind of more set in our career and our life and financially. So we don't need to actually monetize our community or YouTube. Yet we're monetizing them in the biggest indirect way ever, because we created this whole thing where we share ideas, and then we share kind of that process of connecting the dots. And I tell people, I'm like, I make more money off my community than almost any other YouTuber does, but not charging them for stuff. Because eventually they bring me ideas, and I trade on those ideas. And then when I have ideas, I share them with them. We have a Discord, at Dumb Money Live, and we just share stuff. It's kind of like having the biggest hedge fund in the world. Imagine having a hedge fund where you have people from every industry sector, from every discipline, and their passion is so deep because they are incentivized personally. It is. And so it's not a job for them. this is like bigger than a job, and we're all in it together. And there's very much like an us versus them attitude, which is kind of fun. And I mean the them being institutional Wall Street, right? We find things quicker than them. We vet them deeper than them. We connect dots quicker than them. And you know what? At the end of the day, like, we don't have to like sell our idea to some boss.
Yeah.
And we don't have to document stuff. We can move quicker. And it's pretty awesome, man. Like I talked about, I wrote a book in 2010, Laughing at Wall Street.
Yeah.
And I talked about this idea. This was my next thing that I wanted to do, was build this community. But I didn't know if it was actually ever going to come together. And now it's been like 15 years since I wrote that book. And like, it's totally happened. And in my head, everything I wished for happened. So the community lives on X, and it lives on, you know, our Discord and our YouTube channel and stuff. But like, it is so awesome, man. Like, it's like so fun. Because also, you know what's the best part for me? And this is like more of a personal thing. I've been this investing nerd since I was like 13. We were talking about this before the show. Like I started technically trading options through my older brother at age 13. And it was a really isolating environment, because like no other kids in the 80s were doing this stuff. Like I remember
There's no one doing it now.
I remember watching like Family Ties, and Alex Keaton was a business nerd, right, on Family Ties, the TV show, and he would like come in suits and stuff. Like that was kind of like me, not that extreme, but you know, I was always doing this stuff, like with the newspaper, like looking at stocks and like asking my dad
Where
to
did
trade
that
for me.
fascination come from at such an early age? Do you know?
Well, my older brother was a broker, and you know, at the height of like the late 80s,
Wow.
right? So like, you always look up to your older siblings, and so like I had a taste for it through him.
Okay.
I don't know, but beyond the stock market, inherently I was always like this hustler kid who was trying to make it, you know. so I had a whole nother side of me that I used to do garage selling as a kid. I would flip merchandise in the late 80s and 90s, pre-eBay. I'd just wake up at 5 in the morning and take buses around the city. My parents didn't even know where I was. I was like 13, 14, 15 years old. And they're like, why are you leaving the house at 4:30 in the morning? I'm like, I have a sale like 20 miles away. I got to take 4 buses, and I think they're likely to have mispriced merchandise at this garage sale. Because I would often I would buy and sell male-oriented things, because they were the female garage estate sale organizers, so they didn't like they would misprice a lot of items like
cool.
fans and watches and stuff that was like more male-oriented. So it's like I would find those sales, but I had to be first at the sale. So I would just sit there for hours in the dark, and I was one of those annoying people, and I knock on the door, because I knew what I wanted, and I'd just be like, just tell me what room it's in, so I know when you open the door, I can run to that room and get it. Yeah, I make $50, $100 a weekend doing this.
Wow.
But that was like a lot
That
when you're a
would- yeah,
kid in the
100%.
late 80s, right? So anyway, so it wasn't always just investing, but now I do the same thing. Like I social art, like that was like arbitraging information. I didn't even realize it at the time. And now I do that in a more efficient way through this highly liquid stock market.
Is that how you, when you got into trading, and was that sort of the strategy you were going for to begin with, or were you using sort of more conventional methods?
No. Yeah, when I was a kid trading, I read every single book on trading, and I tried every single methodology. Technical trading. I traded commodities. I mean, no joke, I read a book about the Hunts cornering the silver market in 1979. This was when I was a kid. And I was like, this is crazy. This is like, and I got really into commodities. There was a store that sold like gold and silver bullion, and I rode my bike there, and I rode home with a 100-ounce silver block on my handlebars of my dirt bike. Took it home. I'm not joking. This is how much of a nerd I was. Took it home to my house, and I just put it on my shelf, and I would look at it every day. And every day I would wake up and I would check in the newspaper what the silver prices were. Yeah. And I did this for like a year. And at the end of a year, I don't know if I made or lost $8 or something. It was like this is a waste of my time. I took it back to the shop, sold it, and never looked at commodities again, like, you know, that type of commodities again. So I tried everything, and nothing made intuitive sense to me in terms of like where I could have a differentiated advantage over other people. Like, there were always going to be people that were going to be smarter than me as it related to like fundamental analysis, that were going to put in more hours crunching numbers. I mean, how are you going to outcompete them? And then does it even really matter if you, because like the amount of time you have to wait for the rest of the market to eventually crunch the numbers the same way you do? It's just weird to me. Fundamental analysis, like in my head, fundamental analysis was always fairly efficient. Right, and then you have technical analysis, and I know the majority of people that are doing this stuff as retail investors these days, I hate it so much. My distaste for technical trading, and I have to I used to be way more harsh on this. I used to hate technical traders too. Now that I've been doing this a long time and I'm deep in this world, I have a lot of friends that do that. I actually do have a meaningful amount of respect for the very slim percent of technical traders that are excellent at what they do.
Yeah.
I still think the majority of it is hogwash, and I don't think it's the right strategy for 99.9% of humans that want to invest, because one, it's so freaking boring for most of us. I'm not built that way. If you like looking at 15 screens and do you want to make that your life? You're built differently. Good for you. I'm assuming that all the people that do that stuff super enjoy it. Because if you don't, how do you do it for more than a few weeks and just I'm out? That will never be me. I do know that it does work now for some people. But what I do is so fun, man. I always tell people, my approach to investing and my methodology, what I used to call information arb back in the late 2000s, now I call it social arb. It is so interesting. It is so fun. It's so you're literally just deeply engaging yourself in the real world. I like to say the perfect person to do what I do is a private investigator. If you're a PI, you would love this, because you're literally just going out there. You're just trying to observe things, and you're trying to connect dots. And that's all it really is. And yeah, there's some more work to that. There's some work you have to do in terms of assessing the degree to which whatever it is that you surface that you feel will meaningfully impact this company or sector, positively or negatively. Is it meaningful? Will it meaningfully impact their revenue? Will it meaningfully impact the world's perception of that company? Because it has to do one of the two, right? Yeah. And if so, are there things that are more important during your trade window? If so, you need to know that. And does everybody else already know what you think you know? Right? That's essentially my entire book wrapped up in 3 sentences. So that's there's some fundamental analysis involved in that, right? But for the most part, you're just living your life. You don't need to quit your job. You could just do this for fun. You just got to retrain your brain to where you're seeing, I told this story in my book, and by the way, this is a trade that I missed. Michelle Obama, right around during the inauguration time of President Obama, wore a yellow outfit from J. Crew, and she wore it on a talk show. And there was it was on the front of People magazine or something, on a lot of magazines. That single event completely and radically changed J. Crew and brought them millions and millions of new customers that would have never have shopped at J. Crew before. So I tell that story because I always like to tell stories of all the big trades I made and all the money that I made with them, right? But people tell me a story like what do you miss? That's one that I miss. And the craziest part is that the magazine was on our coffee table in my house, right in front of me, I was like the inventor of social arb trading, right? Like I am ground zero. This is literally my life. And I missed it. So a year or two later, I went out and I bought that outfit that she wore on eBay. Not the exact, no, not the one she actually wore, but I bought the exact, and I have it in my closet. The full yellow outfit as a reminder. Just a reminder. But that's the interesting thing. It's like, it's so easy, yet it's so hard.
Yeah.
You know what I'm saying? Because if you think about, let's just talk about this for a second. If you think about the next year, there are going to be huge trades that happen the next year. I will guarantee you, not for all of them, but for the majority of those trades, you could look back and there was something that we as just retail investors could have seen now that we can be, or at some point this year, that we could early detect something in the real world that will enable us to, or would have enabled us to be in that trade early. So now the year hasn't started yet, barely. Our job is to find those things.
Yeah.
That's it. It's that easy. And most of them can be found on social media.
So what are you looking for? Because what I was going to do is go sort of from the beginning to end, but I think we should work our way maybe slightly in a different order. So like, what are you looking for at the moment? What's taking your intrigue? What is the focus? As you say, like a potential generational sort of trade is in the next 2 to 4 years. So what is it that you're identifying, or is there anything that you've identified already?
So I'm looking at a lot of, I look at everything. I actually look at everything in the world. Okay. But this is a special moment in time because of artificial intelligence. I always say, like, you just need one big trade in your life to be a top 1% investor. You get 3 big trades and you're a top 1/10 of 1% investor globally. So like, this is one of those times, kind of like cloud computing or the mobile phone or the internet before that or the Industrial Revolution. Like, this is one of those times where the change is so massive. I think the biggest change of our lifetime, and it's kind of happening quickly. Like the internet, which I lived through trading the internet, the birth of the internet. That happened, we had the dot-com boom and bust, but the actual change happened kind of slowly. This is happening quicker. So I am focusing a lot of my attention on AI.
Yeah.
A lot of my attention is on embodied AI, which is robots, humanoids. I mean, everybody that follows me knows that. That's half my life right now. I do think the embodiment of artificial intelligence is going to be the most radical change of our lifetime, and I think there are opportunities. I mean, the obvious one that's publicly traded is Tesla. I'm heavily invested across the sector, so I went out, a couple of years ago and made a conscious effort that I'm going to go out and meet the most important people in the world in embodied AI, the CEOs, the founders, and I'm aggressively invested not just in Tesla, but in Apptronic, which is an Austin company, and Figure AI, which is a San Francisco company, and I'm invested in some other robotics companies as well. So, but even beyond that, I'm trying to figure out how AI and embodied AI and automation, how it reshapes the world, who benefits, who equally gets harmed by it in terms of like corporate entities. And I'm trying to place those trades over the next few years because I think those are the big ones. Now, I'm also like trying to figure out like what shoes everyone's wearing still. What does a 16-year-old girl want to buy this season, and what's out of trends? Because those are the things that Wall Street is so oblivious to. So those are some of the easiest trades sometimes because they're just completely oblivious to it, or they're usually late to pick up on it. So what I look for on a daily basis is weird. Like it can have a huge range. I'm trying to figure out. Like I was working on a trade this week actually, where it was related to NVIDIA. NVIDIA just released their G50 chip or whatever for gaming. I'm like, okay, it was interesting that at CES that was I would say the two things that were the emphasis of Jensen's keynote were that chip and gaming and then robots, right? Robots. So, but I was like, on the gaming chip, how is that going to change things? And I was like, this is potentially going to lead to a fairly big cycle of gamers building home PCs again, I think. So like, that was like a lot of thought, and there's people in my community talking about this, right? So I actually have been engaging with a few people in my community on my Discord that had this idea, and like there are companies that are involved in the various components of building PCs at home, and so if that's like a little mini cycle that this kicks off, right? Who's gonna benefit? So like it's a thought process, right? Okay, you see something, here's a change. Who benefits, who gets harmed. I tell the same stories over and over again because everybody kind of relates to them. When kids were making slime in their house 10 years ago, Elmer's glue was the main ingredient of that slime. So, Newell Brands made Elmer's glue, and it was only 2.5% of their revenue line, but it went up. They made 60% more Elmer's glue that quarter, and it meaningfully moved the needle for this old school company, Newell Brands. I traded it, made 300% on options because I was able to early detect DIY slime and the key ingredient. Who made it? Who's going to benefit from it, right?
It's almost identifying something. Well, you're identifying the social element and its impact and its popularity. But then going through the knock-on effect and the spider's web of where that ends up.
That's right.
And then just from there, deciding upon, is this big enough to move the needle? To move these markets.
It's all so like intuitive
but that's the enjoyment part, right?
Yeah.
Like you enjoy that process of that research and that insight.
It's so fun, and you don't need any specialty skill sets to do it. That's the greatest part. Like over the past decade, I got to witness so many just, normies or regular people, dentists. I have guys in my community that literally deliver packages for UPS, right? Like pilots and just regular people, and they got into this whole methodology, and they're having so much fun with it, and they send me their trades and they send me their statements, and they're like, Chris, I made so much money over the last 3. This is insane. And I'm like, welcome to my world, right? Like it's doable. It's like doable. Like we have such an edge on Wall Street.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures, doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge, show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode. Do you feel like there's a particular commonality amongst those people though? Even though they're all from different backgrounds, different skill sets, do you feel that there is a particular commonality that is necessary for this style? I know you mentioned early on is the deep thinking, and that might not come naturally to some people. Do you think that's something that can be developed?
Yeah,
or something that needs to be sort of, either you have it or you don't?
No one's ever asked me that question. It's a good question. That's interesting. I think there's a common hunger here. There's a resourcefulness that's important. So there's like people that have an interest in the methodology, and there's people that are good at it. I think to be good at it, you have to be resourceful. You have to be you have to be intuitive. I think on a deeper level, you have to have focus. I think a lot of people have to have focus, or have the ability to focus, and the ability to like separate noise from things that are meaningful. I don't know the best way to say this, but I think a lot of those people, and definitely myself, ADHD, right? Maybe some dyslexia thrown in there. People, lightly across the spectrum. I think it takes kind of a different mindset to be able to have that degree of focus. I've noticed that with a lot of the people in my world that have become really good at this.
Because one thing I would imagine, just off the back of that, focus was the right word. Because I was thinking in my head, if it was me, let's say, and I would love to think that I would be amazing at it, right? But then I know myself when it comes to social media. I'll go on there for one thing, and then next, an hour later, I've gone through, I don't even remember why I went on there. So I remember that I can imagine that level of focus, and I would say passion probably is a big part of it too. Like, is there a great feeling you get once you've kind of gone through the process and you come to a conclusion?
So great. It almost, I try to say it's kind of like, it feels like if you were mining for gold during the great days of gold mining. As a kid, I used to do garage sales, right? It's very simple. You never know what you're going to find. You never know. It's kind of like, people are really into, ripping packs of like Pokemon and all this stuff. Like it's that
searching for the gem,
searching for that thing. And now more than ever, the new generation needs dopamine hits. So I mean, listen, there will be a lot of people that will play into this now, because there is nothing like spending hours to tens and tens and tens of hours over the course of a few weeks, like looking and looking and looking, and you find nothing. And I have so many starts. People don't understand that when they see one of my trades, that there were probably hundreds of starts of things that I thought might result in something, and as the top of my funnel is so huge. No joke, 4 hours a night of just searching comments, and so few things make it down the funnel, because usually it's like, all right, that's not really meaningful to the company. Other people already know about that. There's other things that are happening that are more important than that. Like, there's so many ways that it doesn't make it down to the bottom of the funnel that you have to be dedicated. And I remember, like, one of my greatest, like, when I was just a regular guy in working for a company, I had this boss, and I'll never forget this. I was in his office once, and me and a couple other people were fighting over something, and he said, guys, he goes, my superpower, he was talking about himself. This guy was Kurt Nampton, a company called eRewards at the time. He said, my superpower is finding a way to make something work when nobody else can. He's like, so don't be afraid to bring me deals that have potential to be big but are really hard or difficult. He's like, I will help you figure out a way to get them done. I was like, that's awesome. I was like, and it stuck in my head. I was like, first of all, that's so true. I've been working for this guy for years, and I never even put the pieces together that's why he's so successful. And I was like, that's really cool. And I realized, like, I always thought about that. I was like, what am I great at? And I was like, will I ever be in a position someday to speak like that to someone else and say, this is what I'm great at? And at some point I learned that what that was for me was my ability to see through noise. So most of the investing public is so caught up in financial news, the macro economy, interest, all the stuff that we have no control over, by the way. All the YouTubers talk about this stuff all the time on finance. Most of Financial X is talking about this stuff every day. Most people, it's 99% of the stuff I see and read is that stuff. There's no alpha in that stuff. You're not going to differentiate yourself in that stuff. So I don't even look at it. Like I do not read, for the most part, I do not read financial news or consume financial media. I stopped watching CNBC like 15 years ago. I might watch a few minutes for fun every once in a while, but that's all noise.
Yeah.
So if you could like not look at that and just look at the things that actually matter, that can actually drive alpha for yourself, it seems so easy, but no, it's very hard for most investors to do that because they think that they have to look at all the other stuff that everybody else is, that herd mentality, right?
Yeah. I think unique edge is the best edge you can possibly have, because then almost in a sense, the reason why they probably go for the herd mentality is because in their head they assume that works, everyone does it, so I can feel confident in knowing it works. While the unique edge, I can imagine one of the drawbacks, if you will, early on is just, where do you get the belief from? This is unique, no one's really doing this, so therefore they might find it harder to believe in themselves to go for it. But then when they have it and they can see the results of having that unique edge, if anything, the confidence probably increases because they know no one else is doing this, or very few people are doing this.
The best way to frame it, because as retail investors, I think early on in our investing journey, we see these people that are so smart. They're billionaires, or they manage hedge funds, or Wharton grads, and we're like, that's not me. They're like, can I really compete? Can I compete with these people? There's mathematicians, there's data engineers. Some of the smartest people in the world work for institutional Wall Street. So we're like, okay, I know I'm not smarter than them on a general level. Let's be honest. Like, we all get to that point. We're like, so should we give up? It's not about being the smartest. You just have to figure out how to be smart in a different way. That's it. We can all be smart in a different way where others aren't even playing, right? So and I think once you get over that hump, you realize, okay, I could play in this game. Like, I could win.
Yeah.
Because I don't have to compete with the data scientists. I don't have to compete with the math head, or the guy who's like brilliant at fundamental analysis or technical charts or whatever. Like, I can do this way better than they could do this because their brains don't work like this.
That's one of the fascinating things, though, is that you don't use charts at all, right?
No, I don't even. This sounds crazy. I try not to even look at price, except for the degree that price reflects what people might or might not know about a company. So in a perfect world, as a social arb trader, you would enter a trade at the point of information imbalance when you discover something in the world that is going to meaningfully impact a company positively or negatively that other people are not yet fully aware of. Okay? Regardless of what that company's trading for, regardless of what the PE is or any of that stuff, right? So you don't even need to know anything about the company's price of their stock. And ideally, in a pure world, right? Like, you would exit that trade the moment that the rest of the world or the investing public or institutional Wall Street became aware of that thing that you were trading, that information that was driving your trade, which I call the point of information parity. Now, that would be independent of whether the stock price has gone up or down during that trade window. So theoretically, you would not know what the price was when you entered the trade or when you exited the trade. And then when you exit it, you can see, did I make money or did I lose money?
Interesting.
Does that make sense?
That does make sense.
That seems insane, right, to most investors? But you should not. Now, do I look at the price? Of course. I'm a human, right? And also, to some extent, if you saw a big price movement in the days or weeks prior to the initiation of your trade, that might indicate that someone else found out the information that you found out. So you kind of need to include that in your research.
Yeah.
But the price shouldn't drive it. It's just one indicator of something that someone might or might not know. Now, if you see a stock that's like flat in the months or weeks leading up to when you found this piece of information that just came about in the last few weeks, that's a good indicator that people probably didn't figure this out yet.
Yeah.
But other than that, no price.
Yeah.
No price.
In terms of that, like time horizon for your trades, is it then purely dictated by that? So a trade could last weeks, it could be months.
It should be purely dictated by that.
Yeah.
It could last for an hour or a year.
Interesting.
So usually days to months.
What markets are you using? Is it different? Are you using just options? Are you using stocks? Are you using futures?
I'm really simple. First of all, I do almost all of my research on my phone, and I do almost all my trading on my phone.
Wow.
And I research. I execute my trades through a combination of equity and options, but I use options in a really simple manner. I only use options for leverage. That's it. Really simple. I don't overthink it. When I was younger, I used to trade wild, out-of-the-money options when I was young and didn't have much money and wanted to make all the money, like most young kids do today. I'm no longer that person. So, and also with all the kids trading, which I love, by the way, like the 30 million new people we have trading in the market.
Yeah.
I call them kids, but some of them are older than me. They're just newbies to this world.
Yeah.
They've pushed up premiums in the options market for out-of-the-money calls and puts, which I don't like, so I rarely trade those anymore. Usually I'll put more money into at the money or slightly in the money puts or calls, and I'll usually trade expiration dates that are obviously in sync with when I believe the information dissemination event will be that brings us to information parity. More often than not, recently, that's prior to an earnings date, because Wall Street has so much transactional data that I also buy, by the way. But I don't buy it for alpha. I buy it to so I can assess when Wall Street's able to see what I saw through their transactional data sets, which is credit card swipe data.
Yeah.
Often that is pre-earnings, and so you see a lot of these stocks that move days to weeks before earnings. Like, how do they know? They know because of the credit card data. It's not always, and it's not the best data set, but it's the best data set that they have, that institutional Wall Street has. What's awesome about that is the last few years I've been able to trade options, not always, but sometimes, that expire before earnings, so I pay a much lower premium on the options, and I make a better return. And then in the event that the data doesn't come out before then, I could just repurchase new options for after earnings.
Yeah.
That's I don't have a sophisticated trading methodology. It's not sophisticated. It's super duper simple. Like, you don't have to overthink it.
Definitely. And I think it's probably worth us going into a couple examples that people can learn from and sort of get just a deeper insight into what we've discussed so far. So as one example, I know you would, I don't know if you still do, but I know you did at one point invest into like movies. So like Hunger Games, for example.
Yeah. That's an oldie.
Yeah. But like, can you run us through just that particular trade thesis and sort of the process of that?
I loved it so much. Now, Hunger Games was a unique one because it was a girl who worked in my office who came to me and told me that she read the book and that someone was making it into a movie. And she's like, Chris, I know you invest, and I feel like this is something that's going to be one of the biggest movies ever. It's like, really? I was like, first of all, I was impressed that she even connected the dots, like, because no one would do that back in the day. But she was very like business oriented, and I was like, okay, thanks. And I ended up researching it, and sure enough, Lionsgate, it was one of the biggest, most unexpected success stories for an independent, publicly traded studio. Made a massive amount of money off of that, massive. But what I used to do a lot with films is there are web boards where film nerds, I don't even know if we call them film nerds or what, but like they will try to predict box office.
Yeah.
And so I would hang out there. And what they would do back in the day is they would do a sampling of movie theaters, and you could see how many seats are getting pre-sold at those movie theaters. And you can compare that to a benchmark of other hit movies. And using that data, which is so cool, you could actually get a fairly good projection of what the opening weekend box office was going to be. So I used to hang out in those web boards, and I was the only person that was doing that to make money trading stocks, right? I'm like, these guys are spending so much time doing this for joy, just for the sport of it.
Yeah.
And that's like pretty much the history of my life, like hanging out in places where people are doing really interesting things for data alpha, just for fun, but I'm like doing it for some other reason, right? I used to do the same thing with biotech companies back in the day, where I would I would look on Facebook pages of medical boards and various places where like really niche communities where people were talking about FDA trials that family members were in, where they were all rallying around a certain disease that they all had in common. And I knew that there was a drug in FDA trials, and they were like, oh, so-and-so is doing so well. He's on this experimental drug. They wouldn't even talk about what drug, but I knew what drug it was because there was only one in trial for that. And I would be able to assess how well the trial was going based on a random cousin of someone that was very likely to be in that trial talking about, oh my God, this is saving their life right now. And I'm like, that was alpha, right? Like, but the amount of time it took for me to do that, and nobody else in there was in there for that reason.
Course,
and they're all like public web boards, right? Like it's not like inside information. Anybody could do this. But again, this is getting back to your earlier question. You have to be resourceful.
Yeah.
You have to be resourceful.
What would be the steps? So let's take the Hunger Games one as an example. What would be like step 1 of the process, step 2, up until executing a trade?
So I want to use a more recent example rather than
sure.
Hunger Games. I want to use the example of the Barbie movie in Mattel.
Yeah.
So I think it's more relevant to the people watching this today.
Of course, yeah.
They're not all oldies like me. So that Barbie movie, man, that was a big trade for me too, and my entire community, because I was closely following the buzz, like 9 months before the movie came out, the buzz on that movie, and I saw something really special happening, and no one was talking about it. And so I started following it closely, and I was like, this movie is going to be a blockbuster. And so many thought it was going to be a complete and utter fail. And I was like, if it is a blockbuster, this is so closely correlated with Mattel that leading into the movie release, as people started to realize that it had blockbuster potential, there would be a lot of speculation around its potential to positively impact Mattel stock, because Barbie is such a huge piece of that company. And I was like, what I already knew was going to happen. I am so deeply in tune with what I call the information dissemination window of when people start to talk, and then primary news outlets start to talk about something. Then when primary news outlets start to talk about something, then investment news outlets start to talk about it next. And then people actually start to trade because they see it on CNBC and parts like that. So there's this information dissemination like window. And that is exactly what happened. It is, in fact, it's so crazy because I was at this random dinner with a guy who was in the Hollywood system, and he was so adamant that movie was going to fail. And he was giving a talk about something. He brought it up on his own about how it was going to be a massive failure and how Hollywood was changing. I went and had a talk with him after the dinner. I said, I've been doing a lot of analysis on this movie, and I think you're missing something big. And me and him had like a little argument, right? But I love that. I was like, your mentality and why you think this is going to fail. You're not even looking in the places that I'm, because I was like, have you checked these web boards? Have you read? Well, he's like, no. I was like, you are so out of it. You are so out of sync with the world.
And yet he was the Hollywood.
He was the massive, major investor in these types of films. This is his whole career, his whole life was this. But I loved it because for me, it was like affirmation that they don't see what I'm seeing because they're not looking in the places that I look.
Reinforces the edge even more.
Yes, it's the same. I've talked about this other story a million times over with Elf Cosmetics. It was a Jeffree Star video, a YouTuber who was a makeup tutorial, and it got like 12 million views, and it literally made Elf when it was $7 a share. It transformed the company. One person, one video, and the Wall Street analysts didn't even know who he was.
Yeah. With that example, if I'm not mistaken, you went to a store, right, and you would ask people why they were buying that makeup.
Yeah, that's it.
To get that direct feedback.
Totally. And so, like, going back to the Mattel Barbie movie, and by the way, it was so fun because, like, me and Jordan and Dave, my two YouTube partners at Dumb Money Live, we went to the movie on opening night. We were the only men. I'm not joking. We were the only men in the theater. And it was one of those really nice theaters, and we were having dinner, and Jordan was having wine, and like all of these women and girls in the theater, they were all dressed up and stuff. And we have a photo I tweeted back then of the three of us in front of the movie poster because we were all invested, and we had exited the majority of our position that day. On that day, because at that point it was fairly well known that this was a blockbuster film at that point. So
what was that process in terms of, so you find out the information, you do the research, you're connecting the dots. So what was the process of you going from there to then entering positions?
Yeah. So I did the research. I was fairly confident this was that this was going to be a blockbuster movie, and the world was going to figure that out by the time the movie came out.
Yeah.
So I purchased a really big amount of call options that were, I think, were like at-ish the money, maybe a little out of the money. I think the stock was in the high teens. And my expiration for Mattel was literally that, I think it was like Friday the movie came out or something like that, right? And so the stock traded up to the low 20s, like 21, 22. It wasn't like a massive move, but it was a pretty good move. It was like a 18% move in that couple month window. And I exited out of that trade before that weekend, and that was the weekend that, I mean, in the few weeks leading up to that, that's when it hit the business press, and that's when all the traders there were actually articles about the extent this would impact Mattel. So beautiful. Like, I had a thesis that people were going to figure it out. It was going to hit the press. It was going to hit the business press. And then a bunch of articles were going to come out about would this be positive or not for Mattel. And some number of traders would trade it, institutional, retail. Exactly what happened. And then I exited the trade. And it was a beautiful social arbitrage trade. Beautiful. And it's something that any person in the world could have done. You don't need to be a mathematician. You don't need a degree from, Harvard or Wharton in business, right? You don't have to have a financial pedigree. This is something that anybody could have done. And it was a big trade. And it was like a massive gain on those options. Really? So that's it.
Do you remember how much you gained from that?
I don't. I think it was six figures, wow. I believe. For a fun little trade like that, it was really fun.
I'm guessing with these sort of trades, would you not have stop losses in place and stop outs?
I never, ever use stop losses. I just vehemently am against them. Stocks go up, and remember, I don't trade price. I trade information. So why would I put something in place based on price? Yeah. If I have a thesis on a trade and the stock starts to move in the different direction than I would have hoped, that's a good thing. That means I can go deeper into the trade now. Because as long as my thesis holds, then theoretically, it will still end up in the same place, right? So I actually want it to go in the opposite direction, as long as I didn't go too deep in the trade all at the beginning, right? And I have lots of stories I can tell about that. Like, it's some of my biggest trades from back in the day. There was an Under Armour trade with Cold Gear. Remember when Cold Gear first came out? One of my biggest trades ever. I was able to confirm that Cold Gear was the biggest game changer for Under Armour ever. And yet it was like Lululemon. I believe it was Lululemon came out with earnings. I could be wrong. A week before Under Armour earnings, and they were terrible. And Under Armour just tanked. tanked because it was a sector thing.
Yeah.
People got nervous about the sector, and there was even an analyst firm that came out and downgraded Under Armour. I was like, oh my God, I lost so much money when that happened because I was pretty deep in that trade. I went deeper into it. And of course, Under Armour crushed earnings. Looking back, I think I regret not going even deeper because it would have been maybe the biggest trade of my life because Under Armour got beat up so bad because of that Lulu earnings. But no, I don't want other stuff to impact me.
Does the information, because of the amount of detailed information you're finding, the connecting the dots, does that allow you to have that confidence? So even in those moments where the market's going down, it's essentially going against you, could even be having a lot of volatility to the downside, let's say. Does that allow you to still have confidence knowing that information?
It does, but one should not hear that as that there's a sure thing. There's no such thing as a sure thing. There are always going to be numerous factors that were in your control that you missed, and factors that are completely out of your control that could negatively impact your social arb trade that you have to account for. Macro movements in the market are one. Another might be a majority shareholder that does something for a reason that might not make sense to you. And there was a trade I made in Jack's Pacific when the Elsa doll came out that I thought was going to be the biggest trade in my lifetime. The Elsa doll was maybe the biggest product Jack's Pacific had ever made. It was the #1 toy of that holiday season, and I was very early. I knew that they would have the biggest earnings of the company's history, and they did. And pre-earnings, the stock was up 30%, which for them was insane. That was huge. My options would have been up 200-300%. The second the market opened, the stock was even and then started to drift down. I want to say it closed down 20%. Wow. Wild. Biggest earnings beat in company's history. Massive. I was totally distraught by that trade. Totally distraught. Confused. Angry. Because it was a huge trade for me. And I didn't find out for weeks later that there was a 10% owner of the stock that had owned Jack's Pacific, institutional, owned it for years, and that they had become very unhappy with the company and the management team. The company was complete crap in the 2 years prior to this, complete crap, and that they were using that day of strength and liquidity to exit the entirety of their position, which I'd never even heard of before. They exited 10% of the company's equity stock, 10% of the company they owned, and they exited the entire thing in one day, the day that was maybe the most prolific positive day in the company's history. How the hell are you going to account for that as an investor, right?
Yeah.
So that is the ultimate story of how you just don't know what you don't know, but you have to account for it. And honestly, that is something that I think a lot of younger investors will never account for. I hope they're watching right now.
I
And they're
hope
like,
they are.
like this, that was, man, what a lesson for me.
Yeah. So how do you determine risk when it comes to sizing these sort of trades?
I don't overthink it. It's like a gut thing, right? Like I used to say, and by the way, my risk tolerance is insane. But there's a reason for that. I have a purpose in what I do. I'm trying to build $1 billion charitable foundation. My life's purpose. I have 2 life's purposes beyond my family, and it's bridging the entire world into the investor class. That's why I'm on YouTube, Dumb Money Live. That's why I'm Twitter at Chris Camillo. That's my. I want to bring every human on earth into the investor class because I guarantee you the next 20 years, if you're not in the investor class, you are screwed. Yeah. You are screwed. Even as we enter the age of abundance, there are going to be 2 classes of people, those in the investor class and everybody else. Okay. So I'm trying to get everybody in. But so that's really important to me. The other thing, I'm trying to build this foundation. I want it to be $1 billion foundation, which is just a number I pull from thin air. But it's for pediatric cancer, autism, leukemia, and then animal welfare, right? So like I can't get there unless I'm taking meaningful risk with my trades, unless I'm using meaningful leverage. So I used to say, like, I'll put a third of my net worth on a high conviction trade, which is insane, right? Now, in practice, liquid, a third of my liquid net worth into a high conviction, an ultra high conviction trade. Will I still do that today? Because when I say that, what I mean is options, to where if you're wrong, you lose 1/3 of your liquid net worth. I mean, that's a lot. I don't know. I think I would definitely do 20% right now, 20 to 30%.
And that's high conviction trade. So.
It has to be ultra high conviction, because again, there is a reasonable chance, I would say double digits, no matter how high conviction you are, that something in the macro world or something out of your control, there are a lot of things that could happen, will disrupt that trade, and you'll lose 100% if you're levered in options. So you don't, I'm on like what, year 17 or 18 of 70% annualized returns total portfolio, which is just, I still can't believe it when I say it.
And it's been verified through Jack Schwager and Business Insider.
Yes, and also I do my own audits too. Yeah, yes. But you do not, let's be clear, you do not, that's not achievable unless you're using leverage. Okay, it's not achievable unless you have a very high tolerance for risk. I think for most regular people, I think doubling or tripling market returns is achievable without using a ridiculous amount of leverage. I think anybody can get 20 to 30% market returns, like doing this over time. 70+%. It's tough to do that without leverage.
What was it like starting out though? $20,000. Like how did that differ? Was your risk tolerance still high at that time?
So yeah, it was. I think I had 87,000 in my account, but I took 20 of it to invest with Social Arb, and I had a job. I made money, and I wasn't making enough money to live the life I wanted to live. So I took it very seriously. I was like, I'm going to do this. And 20,000 to 2 million was the first 3 years. That's when I wrote Laughing at Wall Street. My risk tolerance was high then, because it was like, I was like, I'm taking this money, and I talk about this a lot now. I would say maybe the most important thing for investors to learn outside of like the methodology of how to invest as a Social Arb investor is bucketing your money for risk. I think the biggest mistake people make, is that they do not have a big money account or what I call, an account where they can invest with a high degree of risk tolerance, right? Wealthy people all have that. We all have that, right? We're all taking risk, and it's because of those risks that you have the grand slams. We all need to have that, and everybody can, even if it starts at $10. But it should be isolated. It should be thought of differently than the money that you're sending your kids to college with, right?
Of course, yeah.
If you don't think about it differently, you will not pull the trigger, and on a high risk, high reward.
Or the opposite,
trade.
where you pull the trigger too often because of the pressure.
Exactly. So I think people should just literally set up a different account for this. And I talk about it in my book, as I was like, the way that you build that account is not using your own money. Even you make trade-offs in life, and the money that you make, you use those from those trade-offs, you put in that account, because you think of every dollar as $100, and then all of a sudden, if every dollar is $100, because you could definitely turn one into 100 investing like this over a period of time. That I know you can. I did it in 3 years, but over 15, 20, 25, everybody can. Yeah. You just have to be investing aggressively, right? And if you think of it like that, all of a sudden you're a guy clipping coupons. You know what I'm saying? You're a guy like literally clipping coupons every day. You're a guy who's like, maybe you're driving Uber once a week, right? And DoorDash. Yeah. And you're like, what are you doing? You have a 6-figure job and you're also doing Uber? Like, well, yes, because, my wife's out of town and I have a couple days to myself. So I figure I make a few $100 and I'm going to put that money in my big money account. I'm going to turn that $300 into $30,000 over the next 15 years. And, you do weird stuff. You do what I call like I make fun of Graham Stephan, who's a buddy of mine. He's another YouTuber. He's so frugal, and he tells you to do all the stuff with coffee. But yeah, do that stuff. But the difference is put that money, all the Graham Stephan savings, put that money in your big money account, and then do my stuff with it, right? So like,
I love that.
Like do that stuff.
No, I love that. And I remember there's one thing I loved as well, because COVID was such a big thing. It introduced a lot of volatility. It also introduced so many during that period retail investors who entered the market. But you did extremely well through COVID.
Yeah.
By, if I'm not mistaken, you translated newspapers.
Biggest trade of my life, by far. Nothing comes even remotely close to it. And I don't do macro stuff. The only reason why I did that macro trade is because there was a piece of information that was driving it. One piece of information that was not normal macro interest rate type stuff. Like a piece of information that no one else in the world was paying attention to. To this day, I cannot believe it. I cannot believe it. How the hell was every other institutional money manager on earth not doing what I was doing? I still cannot believe it. The only reason why is because I think, Nassim Taleb and his black swan theory is our human minds just will not allow us to believe anything that is that big that hasn't happened before. Right? Like we just will, like I always say, like if a report ever came out that there was an asteroid about to hit us, I feel like no one's going to believe it for the first few days.
Yeah.
Like you probably have a window. Not that an ARB window would work because we're all dead at that point, but like you probably have a window of time to trade that.
Yeah.
Because like everyone else is just like, they're not going to believe. And the other, like last thing, the most important thing I tell people is have a prepared mind. So much is just having, like, you invest, right?
Yeah.
Do you have a California earthquake trade ready to go?
No.
Why? Would you agree that in your lifetime, there's probably, let's call it a 20 to 30% chance in the next 30 years that there will be a massive earthquake in California? And that earthquake might happen during trading hours. Not to be dark, because we can't do anything about the earthquake. And you know what? If your heart is so great, awesome, maybe this trade is just to make money to immediately throw it at people that need it in California after this happens, right?
Yeah.
So it's not like to be dark and evil to make money off of a bad thing, but maybe you make money and you just literally immediately go out there and help people with it. But why? Why don't you have that? Honestly. It's the easiest thing in the world to say, hey, when this happens, I have spent a few hours of my life or 20 hours of my life figuring out that these are 3 awesome long trades and these are 3 awesome short trades. And you're so mentally prepared to do it. And maybe you set a trigger like to alert you if there's from a weather X account or something like that, right? There actually are accounts for earthquakes. And so do you understand, just by having a prepared mind, that one trade, it might happen next week, it might happen in 20 years, the amount of money that you could make, that you could then either do something good for others that need it, or yourself or your family. And there are 100 things like that. I'm just using that one because it's like we can all
a great example,
relate to it.
But that is that prepared mind. So it's just knowing that these probable outcomes that are always present and have high chances over a prolonged period of time, and they're unpredictable of when they could take place, but when they do take place, being prepared. So therefore, it's a simple process. That's prepared, ready.
It's not always difficult. It just takes a little bit of foresight.
And in terms of just a final topic, something that I heard you talk about, and we kind of touched on it very early on, was the difference and the benefits of being a retail trader versus a hedge fund or a money manager or institution. Yeah, because a lot of the retail audience, they always have this thing of trying to trade like the banks, or they really want to trade like a hedge fund or an institution. And I found it fascinating on one of your previous conversations where you talked about how actually there's so much more benefit to being a retail trader.
Yeah, and I know it's hard to believe. I've been saying it forever, but I was in the unique position of having a company that I started called Ticker Tags, which was the first social data intelligence company for Wall Street hedge funds and sell-side banks. And it was one of the best experiences of my life because I got to spend 5 years of my life seeing behind the curtain, meeting with the largest hedge fund managers in the world, training some of the largest investment banks in the world how to interpret conversational data coming off of Twitter. This is back when Twitter was really big in the mid-2000 teens. And wow, it opened my eyes. I was like, I always want to see behind the curtain. Everything that you would think, they are so slow. Their expertise is not what you think it is. There's so much red tape. Their incentives are misaligned. Honestly, they're all good people. Like, some of my closest friends come from that industry, and I love them to death. And actually, some of my really closest friends are exceptions to that rule. They're actually the ones that were really good in that space. Yeah. But most of them either were disincentivized, didn't care. And by the way, what other people don't realize is, like, the incentives are so important. Like, they don't need to take risks. They don't need to get that out front, stick their neck out on something. But they don't understand conversational data. They cannot do what we do when it comes to social arb trading. They're honestly just almost not allowed to do it, right? Yeah. Like, they can't be like, hey, I read a bunch of TikTok comments and it seems like that. No. Like, give me a 5-year history of correlated data. Like, well, but this topic didn't exist till a month ago. There is no correlated data going back 5 years. Well, that's what they want to see. They're just these large incumbent hedge funds and sell side thinking. They are so old school in the way they think about stuff. We have a massive advantage over them. Now, they do have advantages. They can buy credit card data. I think the advantages that we like to speak about that Citadel and those firms have, that's shaving pennies off of trades. That's not what we really think about as investors. So trust me, guys, like, do not be afraid of Wall Street. I have seen it all. Upfront, close, personal. There is nothing to be afraid of. You could destroy them. Like they are slow. They are slow, and they don't care. They just don't really care. And it's a herd mentality. They talk about market noise. No one is more consumed by noise than people that actually work on institutional Wall Street. Their life is market noise. They can't escape it. Everybody they work around, it's just feeding them the same noise over and over again, right? Yeah. So no, they're not deeply entrenched in the real world, not even close.
For those, I know there's going to be a lot of people in the audience. I know just when I first heard about your edge and your style of trading, I was fascinated. I've been literally saying to our team who's been with me on this trip, like, I can't wait to get to Dallas to speak to Chris because I'm so interested. I know the audience is going to be so interested as well. Where would you recommend them to start? Where would you recommend them to start looking at, this edge and sort of developing themselves as a trader in this way?
Yeah, so I know you partially found me through Jack Schwager's Unknown Market Wizards, and I honestly think Jack did a killer job with his 34-page chapter on social arb. I think it's called Neither, about me. Read that if you want to get really personal and understand my whole background. Laughing at Wall Street. It's an old book. You can buy it for $11. I don't get paid anymore when someone buys it. My publisher got paid. I'm not trying to promote my book. It's old. A YouTube channel, Dumb Money Live. We're trying to get on once a week. We have fun. Man. This is like our hobby. We have fun. People in our community have fun. My Twitter at Chris Camillo, and also Dumb Money TV, I think, is our Twitter account. But yeah, follow me on Twitter. I openly talk about almost everything I do. That's what's so critical. Like, I don't hide anything. Like, I'll just openly discuss it. I'll throw it out there. If I have an idea, we have a Discord, Discord/Dumb Money TV. I think. I don't know. It's anyway.
I'll have all the links.
Oh yeah, dumbmoney.tv I think has all of our stuff on it. But like just hang out with us in our community. Like, just follow me on Twitter, engage with me. There are so many other great people too. Like, that's the best part. Like, there's never been a better time to be a retail investor. Guys like you. Like, you're interviewing everyone. Like, there's so many cool, interesting people. I would say this. Be really careful like when it comes to investment advice. I don't give investment advice to anybody. I just help surface ideas, and I want you to help surface ideas for me. Let's evaluate them together. But especially, just don't trade. Don't mirror trade other people. Not even me. Just don't do it. You're not gonna probably know when I'm exiting. So I don't have that. Like, I can't always tell you what I'm doing. Like, it's middle. It's like I have a life too. You know, like don't do that.
Yeah.
Do it for yourself. But listen to other people for surfacing things. Engage. This should be everybody's hobby. There's no reason for this not to be everyone's hobby. It's if you do it right, it's damn fun.
Definitely. And let's hope TikTok stays around.
Yeah,
right?
better. And if not, there better be something else coming behind it that is exactly like it.
I love it. Chris, it's been an absolute honor, honestly, and I hope we can do something again in the future. Everyone at home, links for Chris, everything that he mentioned will be in the description, so make sure you check those out. Drop a comment of your biggest takeaway from this episode. Let me know if there was a question that you would have asked Chris. Put it in the description and put it in the comments. Hit subscribe. Other episodes are on screen, and until next time, everyone, take care.